The stock market just took a massive hit. Every headline is talking about the stock market. Your friends are panicking, you're freaking out, and now you're wondering, is this going to be 2008 all over again? Well, in 5 minutes or less, I'm going to explain to you everything you need to know about the stock market in terms of what's going on. And if you stay to the very end, I'm going to explain exactly why it might be the biggest mistake you ever make by reacting to this right now. So let's get into the video. So since the beginning of 2025, the NASDAQ is now down almost 20%, which is quite a lot. As soon as we go above 20%, we go from a correction into a bear market. Now, a bear market's from 20 to 40% of a downturn, and right now we're getting very, very close to bear market territory. Now, before we talk about best case scenarios, let's get the worst case scenario out of the way. The worst case scenario to be in is if you have all your money in a very high risk stock or a very volatile investment or fund like the NASDAQ, where it's very up and down. That would be a situation where you're in trouble right now if you plan on accessing all of your money very soon. So within the next 5 years, there could be a chance we see another correction further down than this. I'm going to walk you through 3 main tips that's going to help you navigate the murky waters of 2025. So number 1 is that remember, an uncertain market or an uncertain economy is not the same thing as a bad market or a bad economy. Keep in mind that right now, especially, there is a ton of uncertain things happening that are causing people to panic. And this is driving market sentiment very far to the extreme fear end. And this is exactly the main reason that's driving the price of the NASDAQ and the S&P 500 down so much this year. So don't think of the stock market as a representation of the economy. This is one of the biggest psychological mistakes that people make, and so it causes us to get emotional and draw money out of our investments and realize losses and ultimately lose. So number 1 is realize that uncertainty is driving the price of the market down, but it doesn't mean that we have a bad market or a bad economy necessarily. Now, the second thing to keep in mind is that diversification is king in all cases. Why we want to always diversify is because it gives us leverage. When the market has gone down and you have 60% of your portfolio in the S&P 500, but 40% into a balanced fund, what you can do is sell off your balanced fund when the market crashes and repurchase the S&P, because the S&P is going to crash a heck of a lot more than your balanced fund. So we're basically taking a small loss on your balanced and you're taking a large discount on your S&P. And then when the market rebounds, all your money is into a fund like the S&P, and it's going to get way more growth than the balanced fund once the market does finally recover. And history proves to us that the market will recover at some point. So the main thing is diversification is key in all scenarios. So if you don't have your money diversified now, you might want to just wait it out, because by taking a loss is just going to hurt you financially in the future. And I would recommend to just wait it out, just ride the waves until we get back to where we started. It's going to happen, my friends. It's just a matter of time. And the third and final tip is to make sure that you don't think of the price as your money. If you think that your market value in your portfolio is your money, you're dead wrong, because you don't actually have that money until you sell. Your portfolio is based on a bunch of units of different companies and pieces of different companies if you own stocks, and those stocks are going to change in price. And so it's the price that's fluctuated, but your money has not fluctuated at all because you own those assets. So the most common psychological trap that people fall into is thinking that their money is going up and down, when in reality, the price of these businesses and these companies is what's going up and down. Think of the stock market as the economy, but slightly detached and off to the side. If you think that the US economy is just going to keep going down for the next 10 years, you would be making a very bad bet. And if you can believe that, then you can surely believe that the stock market's going to come back as well. So that's the third thing, is make sure that you think about the market as being a separate thing from your money. And by doing that, it's going to help you emotionally navigate these murky waters in 2025. And lastly, always remember that if you think you know what's going to happen next, you're falling into a psychological trap. And this is what hurts most people, is they think that they know what's going to happen next. And I promise you, it's basic logic. Think about it. If you knew what was going to happen in the market tomorrow, you would already buy the stock or sell the stock, and so would everyone else. So therefore, you don't really know what's going on. You have to trust the strategy that you're following and not rely on the performance of your investment, because that is not within your control, but your strategy is. Hope you guys got value from that. If you did, please subscribe and leave a thumbs up, and I will see you all in the next video.